Hello everyone, this is Rahul Jakaria from Sharekhan. Welcome back to exciting 3R actionable stock updates. 3R basically means right sector, right quality and right valuation. These are our investment ideas. Today we have an initiating coverage. We initiate a viewpoint on Artemis Medicare with a positive view and expect a 30% upside in 12 months on its aggressive growth plans that would boost return ratios. Artemis has strong capacity expansion plan of increasing total beds to 2000 over 5 years. We expect the total operational bed to reach to 1387 by FY26, which translate into 36% sales CAGR from FY24 to FY26. We expect EBITDA margin to rise by 480 bips over 5 years to 17.5% by FY26 on account of economies of scale as Tower 3 of its flagship hospital gets operational. Healthy operations to result into 50% earnings CAGR from FY24 to FY26. Artemis ROE is expected to expand to 20% by FY26 from 9% ROE in FY23, led by healthy operation driven by a rise in operational bed count to 750 to 800 and a reduction in working capital cycle. ROE stood at 9% in FY23 as only one tower at its flagship facility was operational. Going forward, the hospital has healthy expansion plan of expanding total beds capacity to 2000 by 5 years. The stock is currently trading at price to equity of 28.5 times and 17.9 times its FY25 and FY26 estimated EPS respectively. Next we have an update on KPR Mills. Our analyst maintains buy on KPR Mill with a revised price target of Rs 962. Garment volume stood at 70 million pieces in first half. With capacity utilization at over 90%, the company is confident of ending FY24 with 150 million pieces in volumes. Business to grow at 12% CAGR over the next 3 years. Cotton prices have fallen to Rs 55,000 per candy in India and are close to international prices. This will provide some support to demand for yarn and fabric products in the coming quarters. KPR's EBITDA margin will be better in second half compared to first half as the yarn and fabric business will benefit from the lower input prices and some uptick in volumes, helping business margin to improve to double digit. Stock has corrected 8% from its recent high and trades at 23 times FY25 and 19 times FY26 estimated earnings. Next we have an update on Bharat Electronics. At the end of quarter 2 of FY24, Bharat Electronics order backlog stood at Rs 68,728 crores, which gives company revenue visibility for more than 3 years. Company recently won orders worth Rs 8,801 crore, which helped company in achieving order intake, a cumulative order intake worth Rs 23,176 crore in FY24, exceeding management guidance of Rs 20,000 crore, which will help the company in growing its order book. Recently, government cleared the procurement of defense equipment worth Rs 2.23 lakh crore, which might provide the company a sustained long-term growth. New non-defense products like air traffic management automation system and growth in export would diversify its revenue and increase size of total addressable market. We expect revenue of 15% and PAT CAGR of 15% each over FY23 to FY26, along with a high ROE of 22% and ROC of 21% in FY26. The stock is currently trading at 28 times FY26 EPS. We retain a buy on the stock with a revised price target of Rs 210.
Thank you for watching. To keep up with the latest from Sharekhan, make sure you subscribe to our channel. You can also download the Sharekhan app for all your trading and investing needs. Investment in securities market are subject to market risks. Read all the related documents carefully before investing.